Good to see everybody. And we are going to dive right into the live markets, and we are going to apply the supply and demand strategy, the original supply demand strategy rules, to identify market turning points, likely market turning points and market moves in any and all markets. If you have a market you want to take a look at, just put it in the chat and we will go take a look at it. I've got a number of markets to go over, so but if you have any, we can certainly take a look at those. And remember, if you want a deeper dive on into the education around what we're doing, you can always just click on the link up there in the chat and attend one of these free workshops. And here we take a deeper dive into the whole structure, location, concept, and all that. So having said that, let's go to the live markets. Here's the S&P. But yes, so remember, for those that are new to these, what we're doing is applying our supply and demand strategy to any and all markets. And what we're and the goal is to quantify supply and demand in any and all markets to identify price levels where you have a significant supply-demand imbalance. Because what we know is that prices are most likely to turn at price levels where supply and demand are most out of balance, right? Therefore, if we can identify that picture on a price chart, that helps us identify those potential market turning points. But we can certainly start with the euro. Let's go do that. And we will look at the spot market euro here. Here it is. So this market at the moment is, well, let's start with the, we just came down to this little 5-minute demand zone. So we could get a little bounce out of here. This is an inside the range zone, right? So the likelihood is that we move a little bit lower. It's okay. We can bounce out of here. It's just not a high probability demand zone. Remember, the most important thing here is location. Inside the range, outside the range. Those are key. A little bit bigger picture view here. My guess is the majority of you are swing traders. So here are these supply demand zones in the Euro USD from a swing trading perspective. We have the 102.08 demand zone sitting just below the range there. And then the tested 106, basically 10 supply zone above. That one's tested up there. Okay. And if we, so you see how price, I'll try to throw in little nuggets of information as we go through these charts. And so you see how price almost got down to the demand zone here, but could not, or didn't. Typically, that, for us, that's a sign, or more evidence, I should say, that there's likely to be a big supply-demand imbalance down here. Okay. Price is getting stuck at this area right now. However, if you notice all of the trading here compared to the very little trading here, that suggests there's a big supply-demand imbalance up here on the supply side, not in here. So we are pulling back a little bit, from this little supply zone here, but the higher probability one is sitting just above that. Okay, and that's from a swing trading perspective. Yes, we can definitely go take a look at gold. Before we do that, though, why don't we go to the dollar real quick? because the dollar was in a key area this morning, and so it's moving quite a bit higher off the demand zone. So this is earlier, this is about, I don't know, 3-4 hours ago. And for us, this zone was key. It was key for a number of markets. But anyway, we didn't quite go halfway into this zone, so the likelihood is that there's still more demand there. Dollar demand moving higher is, a lot of markets are inverse to the dollar. So just keep that in mind. The supply zone above, I believe, is going to be found on, let's see here. We have the 108 there, but I think there's one closer. Yeah. So 106.75 is where the next one comes in. Now you might be looking at this area right here and saying, wait, what about all this? Price could turn here. However, it's low probability because it's all inside of this. It's all inside of this. Does that make sense? So ultimately, price is more likely to move up to that 106.75, and that's applying our structure location rules that we've gone over. Okay. So that's the dollar from a supply and demand perspective. The last turn came from the 108. Now, notice price just barely went into the zone and collapsed. Again, we have a name for that, but more importantly, it suggests that there's a big supply-demand imbalance here. A lot of, big banks, what have you, people selling dollars up here at 108. Okay, the pattern itself, structure location-wise, suggests that. This pullback here helps confirm that. So price comes back up to the 108 area, we would expect that zone to hold up again. We would be looking for example, inverse markets to the dollar. We'd be looking for demand zones that line up with this 108 to 108.50 area. We already have those in the equity index markets. We can go over some of those. Okay. Let's go to, in fact, let me just take you to, let me just take you to the S&P for a minute. And it's really this chart right here. So these are both inside the range demand zones. We're looking at the SPY. This is the ETF for the S&P. But if we do come down into here, we'll also look for the dollar to be at or near supply. And those would, that would be that inverse market relationship that we focus on, right? There's that. And then, yep, we can go to gold. No problem. And again, if you want to look at a market, let's just put it in the chat and we can take a look at it. Now, when you say gold, do you mean gold futures or the ETF? Anyway, we'll start with the futures. Okay. So there are a few zones to look at. The first one is a tested supply zone in gold, 1766. Really, the fresh part of that is going to be closer to 1770. But anyway, there's that. On the demand side, we're looking just a little bit lower, inside the range, lower probability, 1739. Demand zone there. Now watch this. If we go over, oh, not that chart. Let's go, I guess here. Nope, not that one either. I thought there was a closer demand zone. Yeah, there's really not. So we have to get below this. Yeah, let's see, the thing with gold and these demand, like, price can bounce from there, but any news that drives price to there, there's not likely to be enough demand in this demand zone to cause prices to turn. So we would look below that pivot low, but that just takes us to this, which is not that important, and then down to a tested demand zone. So gold has room, and as I just showed you, we look above, right, where not only are there supply zones, but we keep just touching these supply zones and falling. So that suggests gold can go quite a bit lower, right? This is the area down here that we'd really start looking at if you want to focus on some higher probability possible demand areas right there. Okay. And then if we go to, that's gold futures. Why don't we go to the gold ETF for a moment? So here is the, first of all, from a larger time frame perspective, there's that, as I was kind of showing you, the demand zones are a little bit lower. 159.40 is where that one comes in. And there's that higher probability one that I just showed you in the futures, sitting down around 156 in GLD, which is the gold ETF. Above the range, there's the 169.60. Before we get there, however, we have the 165 supply sitting above. We're not close to either of those, so we don't need to spend a lot of time there. And next, we can go to, let's go to oil. So we're just going over these charts with our membership community a little while ago earlier this morning, and we noticed that oil was sitting, starting to bounce right off of our demand zone down there. I can take you back to the 74 demand. We'll take a look at it. There it is. I believe that's it, the 73.66. You can see good structure, good location. And you can see price just flew out of there, so that suggested a big imbalance. Anyway, price turned there and is now approaching the 76.75 supply zone. This one is inside the range, so should be fine, just a little lower probability, which is important if you're thinking of a new position there. Okay. Also on the demand side, if we do move lower, we do have the 71.70 demand zone sitting below. Okay. So, and that is oil. Most of these markets are on the move. And that's what happens, right? You hit one side and you trade back to the middle, then you hit the other side, then you trade back to the middle, and then you create new zones, and that's how it works. All right, let's keep going. Again, if you have any other markets, just put them in the chat. Yes, we can look at that one. Whoops, no, not that one. Yeah, just type your symbol in the chat. So I see the question there. Please explain the idea of supply-demand function on trading. So remember, actually, the S&P seems to be falling here. So remember, and it's hard to go too deep into a lesson in this session, but the strategy, I started my career on the trading floor of the Chicago Mercantile Exchange, and my job was to facilitate institutional order flow, right? As I've said many times, I could not trade my own account because that was illegal when you're facilitating order flow. But it was a great experience, and what I got to see was that prices would fall until they reached a price level where demand exceeds supply, and then they would rally until they reached a price level where supply exceeded demand. And this would just happen every day, every week, every month, every year, right? So you quickly realize that no matter what the news is, any and all influences on price are reflected in price. Therefore, all we need to quantify and focus on is pure supply and demand and what that picture looks like on a price chart. Now that's where you can go back and watch those videos. There's tons of videos that I put out there on that. You can also click on that link in the chat there if you want and get a bigger lesson. But that's the general concept behind it, right? So it's all about supply, demand, and fair value. Then we simply use our structure location analysis to map it all out. Does that make sense? So the stock markets are moving lower. S&P is moving lower. And we do have a demand zone sitting just below today's low. So you may be able to watch this happen in real time. There's that one. That's the S&P futures. Here's the similar area or same area in the SPY. This is the ETF for the S&P. We've got two demand zones sitting on top of each other. This lower one is the higher probability zone, but we're still not there yet. Now, a big stock to look at, which is takes up a big, owns a big percentage of the stock market or S&P, is Apple. And Apple has a similar zone sitting just below, which is not a surprise, right? Apple takes up a big chunk of the S&P. So there it is. And little gap down, a little bit of a gap down today in Apple. And it's trading a little bit lower, but again, not much of a gap for these markets. Anyway, we do have some demand zones sitting below. And then on the supply side, we are going to move over to this chart right here. So what we'll notice here is there's a very big profit zone to the upside. Okay, there are little supply zones before that, but the 422 area is where the focus would be, right? That's the next likely kind of bigger turning point to the downside where that is likely to happen. Does that make sense? Okay. All of this, of course, is from the, as we've talked about many times in the sessions, that's the rally from the 351 outside the range demand zone, which happens to be the low of the year so far, right? Okay. All right. Any other markets anyone wants to look at? If not, I'll keep going through my list here. And we can go over to and again, we can really look at any market. It really doesn't matter, right? We apply the same rules and principles to any and all markets. Okay. There's the NASDAQ. They all look the same. They all look the same. If we go to the bond markets, why don't we take a look at the bond markets? Yeah, we just looked at gold quite a bit. Oh, there we go. Yeah, we can look at the 30-year. That's not a problem. Actually, before we look at the 30-year, let's look at the 10-year real quick so we'll get some big picture context. Here's the 10-year bond note, I'm sorry. And if you've been in any of our sessions, we focused on this larger time frame demand. So we had a big turn there from 109 and change up to 113. This is a monthly chart, so that's a pretty big move in the bond market, which means, and that's where we saw interest rates fall very quickly. Now, the supply side, so notice we're just barely touching the demand zones and trading deep into the supply zones. That suggests that bond prices are likely headed higher, meaning interest rates are likely headed lower. We go to the 30-year VIXN here. I see you want that one. Same thing. The larger time frame demand zone here is, well, let's see. Here's the near-term zone, the zone that's closest to current price from a swing trading or longer perspective, 124.22. Okay, and then nice big profit zone up to the 131.11. Notice price isn't even coming back to the demand zones. That's more evidence that suggests prices are likely headed higher, interest rates are likely headed lower. We've been saying that since we hit these larger time frame demand zones down here. Here's a weekly chart of the 5-year, right? We hit a bunch of outside the range demand zones, and that's been the top in interest rates so far. Okay. Let's keep going. Again, if you have other symbols you want to look at, could be Forex markets, right? Stocks, futures, Forex, energies, metals, just you name it. All right, let's go over to the DAX. Let's take a look. So the DAX did run into our tested supply zone up on the 14,590 area. Noticed, at least in the larger time frames, there's quite a bit of room below to the demand zone there, the 13,582. But I think we have one closer, and that should be over here. Yeah, there we go. Okay, 14,140.56 is where that comes in, but we're pretty far from that at the moment. Let's take a look at the Euro Stoxx 50. This is FESX. This is kind of, not exactly, but it's kind of the S&P of Europe, if you're not familiar with this market. There is I thought there was a supply zone sitting just above. We do have the larger time frame supply zone, but we're not close to that. Oh, 40.94. I guess we're not that far from it. And then on the demand side, there's the 38.92. Okay. There's that one below. And let's see, it looks like the equity index markets are kind of just sitting here. We'll see if they can get down to those demand zones. There's demand zones sitting just below in a number of these equity index markets. It'd be nice if these came into play during our session here. Oh, not that chart there, this one. So just need a little push lower, and that will create a little bear trap in the market. So we'll see how that, we'll see if we get that. Sure, we can look at the Canadian against the Swiss. All right, here is this one. So I don't have supply demand zones on this, but that's okay. Let's probably good if we find them together, right? We do on the dollar Canadian. We'll go to that one next, but let's look at the Canadian against the Swiss here. As soon as the data comes up, we'll look. And while we're waiting for that, we can always go to the larger time frames. So here I'm on the weekly chart, right? And if you're looking at this market for some active trading, maybe swing trading, something like that, when we look to the left and we see prices, and we see all this trading activity over here, probably not a market. There's better stuff out there is where I'm going with this conversation. Okay. If we do, here's a qualified supply zone up here, but I would not be that interested in this market just because it's really just been moving, sideways. I guess sideways to down here, but I guess this one has a decent profit zone with it. So there's that up right there. Okay. And then the demand side against that, of course, well, at least the initial profit zone would be down to, whatever this low is. We're not likely to make a new demand zone on the way up given this price action right here. So good initial profit zone to the downside from that 72.34. Let's go back though. So I want to show you, so how do we find demand looking at any of these, I guess, intraday charts? Well, let's put a horizontal line across the lows, and here that takes us back to, here's the price action. It's the first time we hit this price action. So what we have here, now we can get rid of that, is the other side, which is the demand zone here. Let's get that on the chart. So right there. Okay. So now if I bring this over, I'm just going to make this a daily chart just for a minute so we can see both sides. Okay. So you can see that's a big profit zone. So potential for a pretty big range here in this market. And there's those prices. Okay. Now let me just make this the chart it was. This is almost a daily chart anyway. So, all right, there you go. Since we're looking at the Canadian dollar, why don't we go to the Canadian against the U.S. Here we are. Couple of charts to go. Or to look at here. Well, we're going to look at the 60-minute chart and then this 420-minute chart over here. We always want to know where our nearest supply and demand zones are, because one of the most important pieces of information is profit zone. Without the profit zone, we can't really make any trading decisions. You may have a great demand zone in a market, but you need to know where supply is, right? You have to know what the profit zone is. If you don't know profit zone, how do you know probability, risk, reward, all that, right? Not sure why these charts are taking so long to come up, but they'll get here. And it looks like the stock market's moving a little bit lower, which is good. All right, we can start with, of course, the two charts I want are not updated. There we go. So the demand side, we're going to go below the range, which takes us to a higher probability, 131.77. So there's that. Outside the range is below this, right? Our higher probability zones have to be below that. So there's that on the demand side. And then we go to the 60-minute chart. There's the 136.50 supply side. Notice it's tested just a little bit. And notice how price comes back to the zone right here and collapses. That, again, suggests there's likely to be a big supply-demand imbalance there, big enough to cause price to turn lower. Right? We're always focused on the evidence. Okay. Let's see if the S&P got down to our little demand zone here. Almost, not quite. Okay, so we'll see if we can get down there. And let's go over here, though. So all the equity index markets are pretty weak. The Dow is actually the strongest of the equity index markets, so I want to see where this one was at, but same thing. Has not reached the demand zone yet. Actually, let's go right here. We'll see the supply and the demand side. Again, if anyone came a little late to the session, you want to look at a market, just put the symbol in the chat. So you can see in the Dow, Friday we came into our supply zone here. We've now started to move a little bit lower. The demand zone, or at least nearest demand zone, is still a little ways lower, right around the 34,030 area. Okay. There's that. And then, yeah, we can go back to the USD CAD. Let's go take a look. And then we'll actually look at some more Forex markets. So I think the zone that we found was right up here, right? There it is, the 136, basically 50. So, you know, if we look at current price and we go left, well, you've got that pivot high. So there's nothing here. There's another pivot high. There's nothing there, which brings us to this. So remember, pivot highs and pivot lows are typically not supply and demand zones, right? They don't qualify by themselves for us. What they do, however, one of the things you might want to think about is when you see a pivot high or pivot low, think of your finger, like your pointer finger, and these pivot highs are pointing up. They're saying look higher for the qualified supply zone. Just like the pivot lows are your pointer finger pointing down, saying look lower for your qualified demand zone. That can really help if you get it right. Okay. All right, let's look at some more FX markets. And if it's okay, I'll bounce around. Let's go to our list here. Aussie dollar futures, that's the first one on the list. So why don't we go take a peek at that? The Aussie dollar is trading lower off of our qualified supply zone there. The demand side against that is going to be found. There's a couple demand zones to look at. First of all, down here we have the 65.46. Notice it's sitting below the range. Current, recent and relevant fair value is right here, right? For those of you who've been to that workshop, you know how important it is to identify fair value first. There it is. And then, of course, there's the qualified demand zone sitting below it. And then if we go here, so this is the last time we hit this demand zone down here that was outside of the range. So we would not use this one again. Instead, we would go to the lower demand zone. Actually not found on this time frame at all. Okay. Let's keep going though. A lot of markets to look at. Let's go to the British pound. And we'll start with the futures. So, unfortunately, this one's a little ways lower, or quite a ways lower. There's smaller time frame demand zones in here. However, because it's all inside this, there's not likely to be a big supply-demand imbalance in here. Blow that up, right? Anything we find in here, it's even in here, it's inside of all this, so that's lower probability. Down here below this is where we're likely to find the higher probability demand zone. There's that. Let's actually go to the spot market here. Obviously, it's going to be very similar. Two time frames to look at here on the demand side. On the supply side, we're almost back to the weekly supply zone here, so just keep that in mind for bigger picture context. But two demand zones to look at below current price. This one's not all that far. Notice it's well below fair value, sitting down in the 119.40 area. Two demand zones on top of each other here, right? And if and when price gets down here, you know, fair value sitting right above typically acts as that magnet. Of course, with any and all of these trading opportunities, swing trading, what have you, day trading, longer term position trading, always make sure the risk and reward makes sense for you. Always make sure that you understand the risk, that you're okay with the risk, right? We had so many sessions focused on how the majority of people in the trading world lose money. So just be very careful before you dive into any of this. So that's one demand zone there, the 119.40. Let's also go over here. If we do go below that, here's the 117.10. Okay, sitting right down here. And this one's not only below this recent price action, but it's also below this range. So, and notice the fact that price touched the level and went higher. That's some key evidence for us when we go over our rules. For those of you that have been through the program, you know that term I'm talking about there. Moving on, let's go to the yen, and we'll start with the yen futures. So we keep coming up to our larger time frame. This is a daily chart, right? In our sessions, we've gone over this one a few times, but notice price just keeps touching the supply zone above and falling. This is a daily chart. And the demand side is actually fresh down here. So both of these areas, we would still expect them to cause price to turn. Remember, we don't care about how many times price comes back and touches the zone. What we care about is how deep price goes into the zone or penetrates the zone. Does that make sense? Okay. In addition to that, there's that same area on the 60-minute chart. It's just a little bit smaller on the 60-minute. On the demand side, we've already hit this zone, but there's the 71.91. Keep in mind the fresh part of that is going to start around 71.81 down here. Okay. On the let's actually go to the spot dollar yen. Here we go. Obviously, this market has been a big mover. Just waiting for a couple more charts there we go. So all we've done in this market, for those of you that are in our sessions, we've just gone from our 139.35 supply down to our 137.50 demand, where we had a strong rally. Now the supply zone above that area is likely to be found in the 140.77 area, which is still quite a ways away from where we're at right now. This looks like a really big distance. Keep in mind this is a 15-minute chart. Okay. You talking about this one right here? Could be. It's just inside of all this. That's the problem. So when we use our structure location analysis, that's an issue. If you've ever wondered why some supply demand zones work and others don't, it's most of the time the answer is going to be location, right? Okay. So I put a link in the chat there. Anyone that wants to dive into that structure location analysis, we do go over some of it here in this workshop, and this is complimentary. This is free, and you can see the dates of the workshop there. We're able to spend a good amount of time there. If not, then we'll see you at the next FX Street session. I know we're kind of out of time here. Good to see everybody. And again, if anybody needs any more information, just you can watch the videos, or you can show up to one of the workshops, what have you. And yeah, if you have any other questions, just send them along and we'll try to get them answered. All right? All right, we'll see you soon.